So my name is Amrish Diaz. I'm with Cardinal Financial. I'm a mortgage banker for about 26 years now, come June, which is crazy to say. And then my background is typically helping customers with getting mortgage real estate financing, whether it's Airbnbs, investment properties, private residence, first time home buyer, renovation, things like that. So that's kind of my area of expertise. So that's just a little about myself.
Hey, I'm Robert Zabbia. I'm the Zabbia Insurance Agency. Been the owner for 25 years now. Been in the business since '99. Can't believe it. Last thing I thought I would be doing was be taking over my dad's insurance agency. So we help people with auto, home, small business insurance. Really focus more on the auto and home. Really educate our customers. There's a lot of misnomers out there about insurance. It's all about the money when it's really all about protection. So we really stress getting the right coverages, making sure you maximize your discounts, paying as little as possible without sacrificing the protection that you need at the worst possible moments of your life, which is when you have something bad happen. And that's not the time you want to find out that you're not covered for something.
Absolutely. So, I mean, part of like real estate encompasses obviously getting a mortgage and having insurance for that property. It's they go pretty much together. And when we go through the mortgage process, they go to contract, they apply for the loan, they get approved, they get their appraisal, and then we come to you for the insurance policy prior to obviously closing. So we as lenders, it's very important for us to partner with the right type of people to just help us get an understanding of what the customer is qualified for when it comes to getting premiums, both on home and flood insurance. So, I mean, I guess talk to us about that and kind of your experience.
Well, yeah, I think the biggest problem a lot of people have is they look at the price first without really looking at what they need, or sometimes they'll commit to a house without doing the research on the insurance. And we've had plenty of situations where people had a deal blow up because they didn't realize they need flood insurance because the current owners didn't have it.
Absolutely.
So it's really important early in the buying process to kind of look at the insurance. And education is huge. A lot of the people that come to us, it's their first time they're buying a home. So they either live with their family or rent in an apartment. So really coverages and stuff like that weren't really important. So what we do is we explain to them what they need, what's optional. There's a lot of things you can add to a policy. You're covered either way. Either you're covering it out of your pocket or you're going to have the insurance company pay for it.
Right.
So that's what we do is we explain that to people. And then also, we have to work with you because there are ratios involved and
Correct.
we want to make sure that they don't not qualify because they bought too much insurance.
Correct.
And there is such a thing as being overinsured because insurance is for catastrophic loss. It's not for every little thing that happens. And some people buy policies for everything and then they file too many claims and then they get dropped. And then it's tough to get insurance. So it's a fine line to walk. And that's what we really pride ourselves on is, working with, professionals like you that really do the same thing, explaining the whole mortgage process. I can't tell you how many people that I have come to me, after they bought a house, realizing that they couldn't afford it because they were told by their mortgage person, oh, this is how much money you can qualify for.
Absolutely.
Well, what you can qualify for and what you can afford are two different things.
Completely different. Absolutely.
So, it's great to work with people that, have that same mindset as we do, taking care of our realtor partners, taking care of our clients, and making sure everybody's on the same page to get that person into that house.
Oh, absolutely. I love that. And then would you say that we'd like to refer you guys and, give the information as much as possible so you can bind the policy. But would you say that, even though we're giving you the insurance for the home, are you able to wrap, let's say, cars or jewelry, things like that into the policy?
Well, what we do, we explain to the customer what, the bundling is obviously the biggest discount. There's two different ways you could buy home insurance. You could buy it from a company that only sells home insurance, or you could buy it from a company that'll bundle and they do want the cars and the home. So, we have both options. So if somebody doesn't qualify for, let's say, like Allstate, then we have other companies that will go to, and they'll give you a discount if you do the auto with it.
Yeah.
And if it's not, even though they don't sell the auto insurance, they offer those discounts. But we explain that to the customer. And sometimes people are just so frazzled, buying their first house, they really don't want to deal with the car insurance. So we kind of work with them through the process to show them, what they can do, because we could always fix it after the fact.
Yeah.
And then the same thing with the jewelry. We never put the jewelry on before the closing.
Yep.
Because then we're sending you an evidence of insurance that has way higher costs
Absolutely.
than you really care about, because the bank only cares about the house itself.
Yep.
So what we do is we get all the insurance stuff, and then we can add on the jewelry, because they usually have to get appraisals if they want to add jewelry is a great example. So we do all that kind of stuff for them afterwards. The other thing that we really, work with, and what I love working with you, is that you send us the appraisal. And because I can't tell you how many people, they call me after they went to closing because they got a really cheap deal on the insurance before they went to closing.
Yep.
And then afterwards they call me up because their rate doubled.
Yep.
Because the person insured it for half of what the replacement cost was. So by getting the appraisal, we know what the insurance companies are looking for. So we take the information from the appraisal, put it in the system, and then we tell them, listen, this is what the insurance is going to be.
Yeah.
So, and again, you don't want to have people get blindsided because now they're in a house and their insurance doubled. Now they can't afford it.
Yep.
Because some people are on that fine line that a couple of $1,000s a year couldn't break them. So it's real important for us to understand and help them, understand what it is. And we look for ways, like, I had a client that was buying a really expensive house and, going from a $5,000 deductible to a $10,000 deductible saved them $5,000 a year.
Wow.
So if by 1 year without a claim, he broke even. 2 years, he's ahead of the game.
Yeah.
So those are the things that we do to help people understand what insurance is really. And with a $2 million house, he could afford a $10,000 deductible.
Right.
Whereas other people with a $200,000 house, they probably wouldn't.
Yeah.
So and the smaller houses is not as big of a savings.
Right.
So we go through all that stuff. So, that's what's really important.
Yeah. I see that, like, when I own a couple of properties, and so when I've done insurance, we actually like to over-insure. And it's interesting because I feel like people, the first thing looked at is price. Like, how much is the premium? How much is the premium? The nickel and dime the premium, not understanding that you're getting insurance for just in case, right? And then the difference in, let's say, a $500 premium $500 deductible on a premium and then a $1,000 deductible on a premium is so minuscule or not a significant difference. And
Right.
they don't understand the value of that, right? Like, I guess talk a little bit about that. Like,
Well, yeah, because you might only save $100 a year going to 1,000.
Right.
Most people right now are going at that because the savings between 500 and 1,000 can be $500 or $400 or $500 a year. So after a couple of years, it could make sense. But to go from 1,000 to 2,000 might be $100 a year. Yeah. So you'd have to go 10, 15 years to break even on that. So, and like I said, the key thing is with most people, they really can't afford that 2,000 if something happens.
Yeah.
They don't have that money. Listen, if I'm dealing with somebody who has it, and they're like, I'm only going to put a claim in for the worst, like the guy who bought the $2 million house. He goes, I'm not going to put a claim in for $30,000. Right. So let's go with the $15,000. But somebody who's buying a house, that $1,000 versus $2,000 could make a big difference when they had a fire, they can't live in the house, they have all these expenses that they weren't expecting now. So that's really the same thing with car insurance. We see this, people go with $1,000 deductibles, it might save them $50 a year. So having those conversations is really important and making sure that people understand. That's why a lot of people hate insurance companies because they don't have the right coverage to begin with, and that's why they're being declined.
Yeah. One thing I love about you is that your service is fantastic. If I need something, a change in the policy, let's say that we have a concern about, let's say, debt-to-income ratio, you're quickly accessible. And I've had horror stories where, and I hate to say companies' names, but like Geico, where we would request a change in the policy and I've got to wait 3 days.
Yeah.
Meanwhile, my closing's in 2 days.
Yeah.
Like I'm telling you a little bit about like you at that.
Well, my dad was old school, and I went to work for him and just growing up, it was always about being a service to people.
Yeah.
And so that we built that into the culture of our agency, and we get it. I have more staff than I really should have for an agency my size, but it allows us to take that time to get to know the customers. And what's good is we're going through this whole cycle with inflation that insurance rates are going up.
Oh yeah.
But my retention hasn't dipped. And the reason is because my staff can take the time and the customers understand that what we're doing. And we go through the process with them as far as why the rates are going up and what we can do to offset it, with defensive driving discounts, adding on other things, maybe raising the deductibles. So taking that time where there's a lot, I don't get why so many insurance companies and agents just don't get back to people. Like that's the biggest complaint I hear from customers is I call them and they don't get back to me. We had one company because I broker with other companies, and we had one company we were dealing with, and we couldn't get back to our customers because it took them 2 weeks. And they're like, "Oh, that's industry standard." Well, forget about if it's industry standard. People on Long Island don't care about industry standard. They wanted it done yesterday.
Correct.
If I'm going to closing on a refi, I need that now, not 2 weeks from now.
Yep.
And they were cheap. But that's why, because they sacrificed on staffing and things like that. And that's why it took a 2 week turnaround. So, and that's what I tell people. Listen, if you want to go with, XYZ company, they're not A-rated and their service stinks. And look at their Google reviews on their claims process. And there are companies I tell the people, I'd rather lose your business now over $500 a year than lose your business over a $500,000 claim that's not going the way you want.
Right.
So my reputation is too important to me, and taking care of people is too important for me to deal with those substandard
Yeah.
companies.
Yeah. I mean, I think it's the value of our experience, right? We've kind of seen like the bads and the goods, and we've learned what our customers are looking for. And I think we understand like customer service is a tremendous piece of the puzzle, because you could be the cheapest rate or insurance premium in town, but if you're not giving them the customer service that they're really looking for, you're not answering their calls, you're not answering about what their concerns are.
Mhm.
It almost doesn't serve purpose.
Right, exactly. I mean, look at Disney, you look at Marriott, you look at BMW. Listen, if none of that, if it was only about price,
Yeah.
we'd all have Motorola flip phones and be sleeping at or the Red Roof Inn.
Yeah.
People do value price, and there are people that only. I mean, there's a reason that those cheap options are there, because there are some people that all they care about is price,
Yeah.
and those aren't the people that we focus on. We focus on the people that want the value, that want the help when they need it, that that appreciate us taking the time to take care of them. Because I go through hundreds and thousands of hours to learn my craft, just like you. I mean, you have continuing ed. I mean,
Yep.
And you probably go through the same thing being in the mortgage business. People, all they care about is the rate, and you got to do way more to stand out. And by going that extra mile and giving back is huge.
Yeah.
Giving back of yourself, giving back to the community, giving back to the customers, just being there to answer their questions.
Absolutely.
Which is why, our culture and our agency is we do whatever we're open extra hours. We do whatever we can to help people out. Sometimes the answer is no, but we're upfront with that.
Yep.
We don't beat around the bush. It's like, no, this is the way it is.
Yeah.
And unfortunately in the insurance business, logic kind of goes out the window. I'm sure you go through it with underwriters.
Absolutely.
And, and we have to be the go-between, and having that, that skill set and that personality to be able to connect with people, I think is huge.
Yep.
I think you do a great job of, especially with your realtor partners, that they trust to send their people to you.
Yep.
Because, hey, you and I are between them getting paid. So we need to make sure that we do whatever we can to make sure the realtors are happy, but their customers have to be happy for them to be happy.
Yeah. Yeah. I mean, so I was talking about this with a customer the other day, and I feel like a lot of times people don't like to tell the customers the truth. And they went to another bank. They kind of gave them the song and dance. They gave them a pre-approval that expired. And then I pre-approved them based on today. And they're like, that's not how much I was qualified for. And I'm like, do me a favor. Did you actually physically give your finances to that lender? They're like, no. So how did you get your pre-approval? Oh, I just said my name, my social, my date of birth. They ran my credit and gave me a pre-approval. That's not really how you get qualified, right? And that's kind of like the insurance business. I can say like, hey, here's my address. How much of a premium? You kind of have to do your due diligence to verify everything, right? Do you agree with that?
Yeah, there's so much involved, on both ends, that it's, insurance, they use credit now.
Yeah.
Credit's an indicator. Not even to say I could have people that have an 800 credit score that don't get a great insurance score because they don't look at it the same way.
Right.
So yeah, getting to know people and explaining the and that's one of the things I think in both of our industries is really a challenge. Is there are so many people out there that just tell people what they want to hear instead of what they need to hear. And that's what sets you and I apart, I think, is because we're outright with people. It's like, listen, this is the way it is. I'm going to do everything I possibly can to get you to qualify, but these are the parameters. I'm not going to tell you something just to get you through for you to find out that there's going to be a problem on the back end.
No, I agree.
Our business is based on, building relationships and connecting with people and having repeat customers.
Yeah.
And, chasing that buck now to get somebody in the door now and then hurt your reputation on the back end. It's just not worth it.
So I know on the mortgage side, like when we qualify customers, we're looking at their income, we're looking at their credit, we're looking at how much reserves they have. So we have a certain criteria that allows them to obviously maximize the lowest rate or to get them qualified for a mortgage. So I guess in insurance, you kind of look at the same thing. Like you're looking at variables that affect their premium, like, credit scores and, how many claims they put in. Like, Kind of walk me through some of the variables that are involved when you're looking at a customer.
Well, the thing that being a broker, it's challenging because different companies have different rules.
Okay.
So I need to know about the property they're buying, because some companies will say, hey, that house had 2 water claims, so that means there's potential for more water claims. We don't want to write it. Whereas other companies will be like, well, you haven't had any water claims, so we're going to trust that your history is going to carry over to this house.
Gotcha.
So there are things like that. Like during Sandy, it was a big problem because all that salt water, when it gets into the electrical, into the house, that could start fires.
Yep.
You could be a year or two down the road for a fire. So
Oh.
a lot of the companies that had Sandy damaged houses, they want certification that all the electric was updated.
Mhm.
So it all depends. I mean, we're kind of beyond that, but those are the kind of examples of things that we need to know: the current house, the prior address, run their insurance score, and and then just look at, okay, are they going to bundle? Are they, are they married? Are they single? Like all these things all come into account, not as much as you, because you got to look at income and,
Right.
And I mean, you can coach people too.
Yep.
I know you work with credit people. So
Yep.
this way, if they have issues with their credit, they can fix it. Whereas on our end, it's really not much that they
Yeah.
can do to improve their insurance score, because they're looking at, unless they have something like, a false, collection notice or something, then if they get that taken off, it could improve their insurance score, because those are the things that the insured, but they don't, it's like a black box. They don't
Yeah.
tell us. It's not like you guys, what makes up their credit score.
Yeah.
With us, we don't know, because every insurance company looks at it. We have one company that thinks that this person is great, and then other companies are like, they're not so good.
Right.
So, so that's the importance of making sure that we shop them around with the right companies, knowing what companies like certain areas. Like, you mentioned, the big 800 number out there.
Yep.
And the big problem with a lot of companies like that is, you have somebody in Iowa that's selling a home insurance policy in Patchogue with a company that's out of Connecticut. And they don't realize that company in Connecticut doesn't like Patchogue. So they're going to do anything to get off of that policy after they wrote it. We kind of do that. So we know that, hey, listen, if you're buying in Patchogue, these are the companies to work with.
Yeah.
If you're buying in Levittown, these are the companies to work with. Because we know that even if they approve it up front, the underwriters are going to look to get off of it.
Yeah.
And with what's going on right now in the economy, there are insurance companies going out of business, which is scary. I mean, insurance is like, the most conservative, I mean, you have banks that are failing. Now you have insurance companies that are failing. So the last thing you want is to be with one of those companies that don't have that financial strength to survive this. And then, I mean, one of the companies just closed their doors March 29th. And so people, like, as of March 29th, they had no insurance.
What do they do?
Well, I mean, some of them were rewriting. Some of them don't even know yet, because they got a letter in the mail and people just nobody's calling them because they haven't through an 800 number.
Right.
And, so now they have no coverage and they don't even know.
Scary.
So, having a fine, and it's funny because I was dealing with somebody who was referred to me, and his company was going out of business and he needed to replace it by the 29th.
Yeah.
So I got him a quote. He goes, oh, that's too much money. And I was only paying this. Well, it doesn't matter what you're paying. That company went out of business. And he went to another company that had a weaker financial rating that the company went out of business. And I'm like, you realize you just wanted the cheap premium. So, there are people out there that everybody thinks they can get one up. They like insuring a property. You talked about Airbnbs and investment properties. If you put it down that that's your primary home, you're going to get a better mortgage rate. So people will do that, and then they get the insurance. It says it's their primary, but then they have a tenant in there, and then there's a claim that's not going to be covered.
Right. Right.
So, unless you're willing to take on the risk and pay all that. We had that happen with somebody, and it was like $80,000 worth of damage. A pipe broke.
Ooh.
So that's not a minor claim.
No.
So he had to pay it out of pocket because he had tenants in the house. And it was written as a primary home. So those are the things, you're going to pay, what was it? The old Fram commercials, pay me now or pay me later.
Yeah. Yeah.
And that's really what it comes down to. I mean,
Yeah.
Insurance companies will, one accountant told me, somebody asked him, we were in a meeting and somebody asked him, hey, can you write this off? He goes, listen, you can write anything off. It's can you justify it when you get audited?
Right.
It's the same thing with insurance. You can get a policy that says anything, but when you have a claim, will that claim get paid?
Yeah.
Like the big thing is hiding young drivers, and the insurance companies are getting smart to that. What they're doing is they teamed up with the DMV and they run a report on every person that's licensed in that house.
Oh, wow.
So you might get away with it for 6 to 8 months, but eventually they're going to catch up on it.
Yeah.
And then you have a chance that they're going to cancel you because you committed insurance fraud. So with the insurance companies losing, I mean, State Farm lost $14 billion with a B dollars last year.
Billion.
Billion. So, Allstate lost $1.4 billion last year. So insurance companies need to get the premium. So they're figuring out ways that they can catch people who are kind of going out that. And they're also limiting what they're going to, a lot of these coastal homes that are getting written right now are going to have a hard time because the companies that are writing them are the weaker financial companies. If they go under,
Yeah.
we're going to go back to writing New York State property policies. And the last thing you want is the government providing you insurance.
Yeah. So you mentioned something about like flood insurance. So like I have a customer who's buying something in Freeport. We all know Freeport is quite a bit of a flood concerned area. And one of the things they asked is when we qualify, can that flood insurance be transferred? And if not, we have to obviously get brand new flood insurance. And I know I actually sent it out to you guys to give us an idea. I guess talk a little about like flood insurance. Like I think
flood insurance. So what happened is because of Sandy, and all the flooding in the Midwest and all that, FEMA realized they can't just keep subsidizing floods. Now the problem is the National Flood Insurance Program falls within the law.
Yep.
So they did a change to the law years ago, and of course NAR, National Association of Realtors, and other special interest groups came in and said this is going to affect our lifestyle, so we got to go back to the old program. So they convinced enough senators and House of Representatives to repeal a lot of those changes, which were getting them the premium. So now what FEMA did is they just redid the whole flood insurance program, and they got rid of the grandfathering. So the grandfathering was if you were in a low risk flood zone in the past, you can keep that flood zone, and even as a buyer. But they got rid of that because that wasn't in the law. That was just a rule. But the one thing that is in the law is that you can transfer the policy. So that's the best way to save money is, if you're a home seller, the last thing you want to do is cancel your flood insurance because you paid off your mortgage.
Yeah.
Because that makes your house more marketable. Because if you're paying a subsidized rate, you can pass that subsidized rate on to the buyer. And so that's really the best way to save money. I mean, there are private companies that are out there, but the problem with the private company is they can pull out of the market. So don't give up the subsidized rate. I mean, listen, if you can't take over, we have I had a situation right here in Massapequa where somebody was buying a house on the preserve, nowhere near the water.
Okay.
But because there's a stream, the house got rezoned to a high risk flood zone.
Oh, wow.
So the 80-year-old couple that had the house didn't have a mortgage, so they had no idea it was rezoned. Nobody told them.
Yeah.
So they sold the house and new people were buying it. The flood insurance through FEMA was like $4,000. They couldn't afford it. Wow. Knocked them out of qualifying for the mortgage.
Right.
And so we found a private company that was willing to do it for $2,000. And that helped them fit into it. Freeport, I had a house that was like $5,000 for flood insurance. We had a private company that would do it for $18,000. But the house had no flood insurance, so it made sense. But if you have a private policy, a FEMA policy, and you can only save a couple $100 a year, keep the FEMA policy because of the fact that that rate's subsidized. And if you can't go back to that rate, so if you cancel the FEMA policy and take a private one, and then that private company says, "Oh, we're out of this because we lost too much money," now you're back in and paying the full rate. And some of those rates I have people that went from $800 a year to $8,000 a year.
Wow.
Yeah. So taking over that $800,
and that's just on the flood.
That's just in the flood. So taking over that $800 a year policy is a great selling point.
Absolutely.
For a buyer.
Yeah.
So those are the kind of things that we coach our people with. And, we don't even make money when we do it over because basically the current broker that has the flood insurance, keeps the flood insurance policy and they just, change the name on the policy to the buyer. But we still process it because, like I said, it's about giving and making sure that, we're there for the customer and doing the right thing. We don't want to try and sell somebody something that's going to put them in a bad space.
Yeah. Are you educating a lot of your real estate partners or any type of partners about how the importance of insurance is? Like, what are you doing to kind of give them an idea? Like, hey guys, this is why it's important.
Well, one of the things that we started doing, actually, it was right before the pandemic we started, and then I launched it during the pandemic, was doing continuing ed classes on insurance because there's nobody out there doing that.
Oh, that's awesome.
And, so working with our, realtor partners, we provide, being an insurance agent, I can teach anything that has to do about insurance.
Yeah.
So we put together ones on home insurance, condo insurance, investment properties. You and I did that one
That's right.
not too long ago.
That's great.
And it was like our biggest hit.
Yeah.
And it was awesome because we had real people that do investment properties, and also on both sides of the table
Correct.
were on the panel, and it was great. So those are the kind of things that we do to add that extra value to our realtor partners. Because there's so much misnomers out there about insurance, and and most of the realtors I deal with, they want to do the right thing by their customers. A lot of them get into real estate, to make money, but they also do it because they have a passion.
Right.
And they want to do the right thing for the customer. They want the customer to be in the house for years. They don't want to just sell them a house and walk away and move on to the next one.
Right.
So, so we make sure that we teach them what they should be looking for. Hey, how do you know if it's a good insurance company or a bad one? How do you know if if the person's getting the right coverages? So we teach them a little basic, which is funny because a lot of them then after the class, they're like, you need to take a look at my insurance. I didn't know any of this before the class.
Yeah.
And that's the problem is you have these, commercials that are out there that all they talk about is rate, just like you.
Right.
Everybody think, oh, so what's the rate you give me? The rate and what they pay, two different things.
Absolutely.
It comes down to the monthly payment, not the actual bottom end rate is.
Absolutely.
And people don't realize that.
Yep.
All the different costs and, is it an adjustable rate, is it a fixed rate? All the different things that you do makes it a huge difference.
Absolutely.
And people just don't get it. Like they're told things on TV by these, talking heads that don't really understand what they're talking about at the time.
Yeah.
So it's our job then to kind of educate them.
Yep. I agree. I think a lot of times, what's a great value for both of us is that we're very good at holding the customer's hand and explaining every detail. A lot of customers don't realize when you're putting 5% down or 10% down, there's mortgage insurance in that payment, right? So I explain to them, listen, your mortgage is built in 4 pieces: principal and interest, which is below your borrowing, the property taxes, your home insurance, which is important, maybe your flood insurance if you're in a flood zone, and private mortgage insurance. We're explaining to them these are the 4 pieces that are inside your mortgage payment. So make sure you understand that. And I explain to them what are the variables. Taxes may go up, property insurance may go up. We don't, so give or take, flex a couple bucks here and there. And that's why we like to preemptively come to you guys and say, hey, Rob, what do you think this insurance premium is going to be? How bad is this flood zone? So it's good to kind of get all that information up front.
Yeah. I mean, when you're buying a home, that's the thing you need to do before. I mean, I remember, 25 years ago now, we bought our home, and, the mortgage guy one of the mortgage people we went to was like, oh, this is what you can afford. I'm like, I can't afford that. Like, what's the monthly payment going to be? This is how much you can afford. I'm like, well, what's the monthly payment going to be? And he goes, oh, it'll be this. I'm like, I can't afford that.
Yeah.
Like, I want to have a life outside of paying my mortgage.
Absolutely.
And I think too many people get caught up in that. They rely, without really, and that's why I think you stand out is because you explain all that to people.
Yep.
A lot of people just say, oh, well, you can get a $1 million loan. Nobody ever asks, well, what's that loan payment going to be? And what are the variables like you just talked about? Like nobody has those conversations that, and that's really where I think educating your client and, is really important. And I think that's why, everybody, like we were talking about, ChatGPT and artificial intelligence replacing a lot of jobs out there. And I don't even see that being able to have those because people want a connection.
100%.
They don't want, I mean, how many times do you pick up the phone and you have these automated attendants and you're yelling representative? Because, I think the most frustrating thing is when you went online to try and fix it yourself and you says, oh, go to our website. Yeah, I did that already. I mean, I need to talk to somebody.
Yeah.
So I think there's always going to be that out there. And, I always teach my staff, it's more about making that connection than it is. Listen, if you don't know the answer, and you tell somebody, they're not going to think any less of you because you didn't know the answer.
100%.
If you give them the wrong answer because you needed to fake it, that's what's going to get you burned.
Right.
So being able to say, you know what, let me find that out for you and get back to you. That's a great question. I think that's more important than just making up something and to make you look like the expert. I think being the expert is really what the most successful people that in all professions I deal with is being honest up front, explaining everything to people and being a person, and connecting with them and talking about their personal stuff and, what connects you as a person to them. Like we're both in the cars. So that's really cool. Even though you're a Chevy guy and I'm a Ford guy, that's so cool. But it's cool to like get to know people. And I think that's really what you do that really makes you connect with, I know a lot of your realtor partners and, and that's what they love about you, is that you're genuine, you're real, you're always giving, and those are the things that people want is they want somebody who is going to give. And that's one of the reasons why I started teaching the classes, because I can tell people to the blue in the face how great I am. But unless I start teaching them what it is that they should know and shouldn't, even if they take that information and go to another insurance agent, it just makes me feel better knowing that this person's walking out of my class knowing more and that they're going to be more successful. And eventually it comes back to you. Even if it's not that person, somebody else will be like, hey, this person really knows what they're talking about. I'm going to start, I'm going to send them some of my clients. So this way I know they're taken care of.
Yeah.
That's what it's all about. It's not always about winning the deal, making the sale. It's, it's about helping people.
Yep.
And it all comes back in the end.
Yep. Can you remember a story, like an insurance horror story, like something that sticks out that you can think of? Because I actually have a story.
No, do you?
I have an insurance story. So I had, and this is going back probably, what are we, 6 years ago. And we had a customer who got insurance on their own. I gave them recommendations. They chose who they wanted. They chased after the lowest premium. 6 months later, they did a renovation mortgage. And I get a call 6 months after the closing. Hey, I had a really, really bad flood. Everything in my renovated basement is completely ruined. And the insurance company won't do a single thing. And I was like, wait, what do you mean? And so they had explained how they really got a very bare minimum insurance policy. And for whatever reason, that insurance company would not cover the basement and all the damages. And they had excessive $25,000 of damages. And it's an interesting story because I said, look, first of all, I refer customers who actually, clients and partners who actually are there for you to service you, take care of you. But for this exact reason, this is the reason why. Because they're going to explain to you, why was that important? You chase after the almighty dollar, and I get it. Everybody wants the lowest of everything, but you can't sacrifice price for quality.
Yeah.
Right? Do you agree with that?
Well, yeah. I mean, we had somebody who was referred to us after the bad thing happened, which they bought a condo in Brooklyn and they gutted it and were renovating it. So when they did that, they needed a renovation loan, so they got a renovation insurance policy. But what the broker failed to do was to sell them a regular policy to cover the stuff that's completed. So now they had this renovation policy, and outside of their renovations, there was work being done on the building.
Oh, shoot.
That contractor burned down the building, not just their unit, the whole building went. And they had $1 million worth of renovations in this unit that was not covered because it was all completed. So they had their furniture in there already. They had, and the broker just sold them the renovation piece, didn't talk to them about the rest of it. So, we had to go in and then sell them a new renovation policy because now they had to start over.
Yeah.
And, a regular condo policy to cover the improvements that were completed. And, and that's really where, so now they had to go in after and sue that insurance broker for selling them the wrong policy. And, that's really where it comes down.
That's a tough lesson learned.
Yeah. The other thing is like, as when you have, like I mentioned Padjog before.
Yeah.
I had a realtor call me up. Same thing. He referred everybody. He referred his mortgage partner, his attorney partner, his moving partner, his home inspector, and an insurance guy. And the customer used all of them, but went to Geico for the home insurance because he had his motorcycle there and his cars, and to him it made sense. Well, the problem is that the house is in Patchogue, and the insurance company that Geico used, who we use that same company, but we wouldn't use them because it's in Patchogue and they don't write in Patchogue. So they sent the customer a letter saying that they were canceling the policy because the roof failed inspection.
What?
So now remember, the realtor referred the home inspector. So now the customer is mad at the realtor because he thinks the home inspector just said it was good just to get the deal.
Yeah.
So, so I explained to the customer, no, that I know that company, we ended up writing them, flew right through the home inspection without a problem. And since then, that realtor now makes sure that the customer gets a quote from me for every deal, because now, and that's what it is I think the biggest problem that a lot of realtors, until they have a problem, they don't really think they need to get, because the insurance and the closing and, and the contract are so far apart.
Yeah.
The mortgage people see the value more of the insurance because you're needed 2 weeks before the closing.
Yep.
But really, they should be looking at that insurance before they even sign the contract.
Absolutely.
Know what those costs are going to be. And, so now that's part of what my thing is to make sure that the realtors understand that they should be educating the customers to get those quotes before they sign that dotted line. Because it is something that could make or break it.
Absolutely. Awesome. I think we're gonna try to wrap it up. I wanted to just ask one question. So I know a lot of customers will buy investment properties, second homes, primary residences. Can you just talk a little bit real quickly about some of the biggest differences when you have like an investment property in your coverage versus like your primary residence?
Well, yeah, I mean, so you have your primary residence, a secondary residence, and investment property. So the primary, you're living there at least most of the time.
Yep.
You can even rent it out as a two-family and still have a regular homeowner policy. That's fine. So as long as you're living there. Same thing with the secondary. I know a lot of people that'll buy a secondary and they rent out part of it, whether they Airbnb it or rent it out for the
Yep.
time. As long, that's fine. You can do that. When you have an Airbnb property, though, you need to make sure that the carrier is okay with that. Some companies don't want short-term rentals,
Right. Okay.
so you have to make sure that the company you're going with understands that because again, it's all fine and dandy until you have a claim and they say, "Oh no, we see that's on Airbnb or VRBO, we're not going to cover the claim."
Yeah.
And then the same thing with investment properties. If you have a tenant in the house, you need to make sure you have a landlord policy and require that the tenant have renter's insurance. We had a good friend of mine had a family member was renting one of the houses that he owned, single mom, you know, struggling to get along. He was helping her out and rushing out of the house to get the kids to school. She left the pot on the stove and caused a fire
Oh my
and
goodness.
several $1,000s worth of damage. He didn't really care because, he was covered.
Yeah.
I felt bad for her. But the problem is that she was liable. So the insurance company that insured the house went after her for the
Yep.
damage.
Yep.
So if she had renter's insurance, which costs a whole $150 a year, the insurance would have paid it and would have been gone away. And now he's coming after me to get the insurance company. I'm like, legally, they have every right to do this. I can't get them to back off. I have no, I sell the policy. I can't tell them how to handle the way they're legally allowed to
Right.
do business. So, so that's why it's real important to make sure that your tenants have coverage because a lot of them don't understand that all of the contents, that's not covered. The building is covered by the landlord policy, but the contents, their liability, and it also gives the landlord additional protection.
Yeah.
So if somebody trips and falls, they have two people to sue, not just one.
Right.
So they'll go after the tenant in case it was something, they have a dog bite, the tenant's dog bit them. Well,
Yeah.
they'll go after the tenant and they'll go after the owner, but at least there's extra coverage there.
Wow. That's awesome. Wow.
So let me ask you a question.
Sure.
We're going through all these different mortgage ups and downs with the rates. What for some, to me, I don't think there's ever a bad time to buy a house. I think, it's always a good time. Like what tips and tricks for people that are like on that borderline right now? What should they be doing as far as, how should they set themselves up? And should they be looking for as far as, timing of buying a house? Like what are like the tricks that they should do to set themselves up for success?
I tell customers all the time, the very first thing you should do is obviously get pre-approved. And the pre-approval, it may seem like a daunting experience, but it's so educational and so important because it's going to say, this is how much I can afford. This is how much I'm spending. This is what my monthly payments are. This is kind of where I'm at, and I explain to them financially, the difference between today, you were either renting or living with family and versus the future, right? So I explained to them about equity. I bought my first place and 6 years later, it's worth $500,000. How much of a value that is. I explained to them like, hey, this is your monthly payment. This is what, you can afford, or this is what you can qualify for, which has huge difference. You can qualify for $1 million, but maybe you don't want $1 million loan. Maybe you only need a $750,000 loan, So I'm going to cater to your goals. And I always ask the customers, what are your goals? Like, what do you think a fair monthly payment is to you, and how much of a budget or how much you want to spend on your home? So like these are questions that I want to cater to the customer, and of course I'm going to be real with them, right? If they want to buy a $200,000 mansion in North Shore, Nassau County, I'm going to keep it real with them and explain to them that's probably a little bit far fetched, So I like to guide the customers getting pre-approval. I help them understand it, and maybe today is not the right day. I'll go over the numbers and say, look, if that's the numbers that you're not expecting, that's cool. Like maybe you need to sit back and let's do some improvements. Maybe fix your credit or save some more money or try to work on getting a better job to earn more income. I'll go through all those options with you. And I'm not afraid to tell them what's the truth, right? So I think that's important because I do hear a lot of people will sugarcoat it and they'll kind of make up this story and kind of let them hear what they want to say versus what they should hear, which is the truth. So I think that's an important piece. But, I always tell customers, like, let me look at everything. It's completely free. It's totally confidential. You have nothing to lose and everything to gain. It's an education. You don't have to go forward. But if I can give you an education about understanding how real estate can help your life, it can literally change your life. It could be your retirement. It could be your college tuition. It could be something that you start small, and then you can go 6 months later, a year later, 3 years later, and get something bigger, right? To when your family gets bigger. So, I go through all these options with them. I explain to them all this, and I think that has a huge value. I think walking through every detail is super important now.
And I think one of the big rumors out there is you need 20% to buy a house.
Yeah, which is
So
definitely a misnomer. I think that is definitely a big popular thing that people think 20% is not really what you need. You can do as low as 3.5% down,
wow.
which is great. I mean, if you buy a $500,000 home, people think, oh man, I need $100,000 just as a down payment. No, you don't. You need as low as 3.5%, which is only 17,500. And people are like, wait, that's it? Really? Only that little? Yeah. I'm like, yeah. That's the amazing options that you have. And that's what I'm here to is educate you, allow you to know what are your options.
Yeah, so definitely, anybody should speak to, you if they're thinking about it.
Oh yeah.
Just so this way they can see exactly what it is and then they can set themselves up for success. One of the things we were at our seminar you were talking about is that if somebody buys a two family, they can use the income from that second to help them qualify for the loan.
Yeah. So if they're buying like a multifamily, like two family, three family, four family, the rental income from that property that's they're earning, you can use that as part of qualifying. So if you have a base income of $100,000 a year, you can also add that rental income. So let's say you're getting 2,000 a month.
So even though you're not collecting the income now, it's going to come with the purchase, so you can use that to.
Correct. Which has a huge value.
Oh yeah,
That's great.
so that helps a lot of people then get into a house, and then they could rent the other half and buy the house that they really
That's
wanted.
exactly right.
What about with Airbnbs? Like, what's the or VRBOs? There's a lot of people that are doing that now. Like, what's the requirements? Like, is it the same down payment? Like, how does that work?
So the down payments are definitely different. Like with Airbnbs, people are purchasing them typically as investment properties. So they're not living in it. They have the intention of renting it. So they are required to put the minimum down payment of 20%. You can do as low as 660 credit scores. And, some of the times I'll explain to them that if you're not completely using it as an investment property and you're using it as a temporary basis, you can do it as a second home where essentially it's considered a vacation home where you can do as low as 10% down.
Oh, wow.
Also have as low as 640 credit scores. So the criteria is a lot more flexible. I know a lot of times customers come back to me and they're like, hey, I don't have that kind of money. 20% is a lot, So I walk them through the options, but second home, 10% down, investment property, 20% down. So those are just some of the basics whenever they're looking to look for down payment options.
And what I know with the insurance companies, if they do it as a secondary and they put the Airbnb endorsement on it, and we just use that as the term, it's not called that in the
Right.
policy, but it just makes it easy for everybody to understand it. But if they buy it as a secondary and they do rent it out, as long as the endorsement's on the policy and the insurance company's totally fine with it. Is that the same thing? Like if you bought a house as a secondary, so you only put the 10% down, qualify for the mortgage, but now you decide to rent it out 50 weeks out of the year instead of just 20.
Right.
Is the bank still okay with that?
I mean, look, they're not okay with it per se because essentially you're not being transparent about how you're occupying the property. I think once you've closed on the home, how you utilize the property, they're not checking in and seeing if you're using it as a second home or investment or primary residence. At that point, I think they're just caring about the fact that you're paying for the mortgage, right? So as long as it's on time. But it's the idea is that they're trying to analyze risk, right? Are you going to be able to pay the mortgage? Are you going to be able to afford it? So that's all the options I explained to them about is that affordability is the most important piece. Like you're doing it as a second home, you've got to carry both mortgage payments. You do it as investment, at least you're getting rental income to wash some of the property of one payment. So we'll talk to them about that and give them those options.
Would they, let's say if it was that they're buying a second, because I have this situation that somebody just did it. I'm just curious to see how he qualified for the mortgage. So somebody just bought a secondary home, and it has a cabana, or not a cabana, but a small cottage on the property
Okay.
that's rented out year round. They have a tenant that's in there, which is one of the. Now, would they be able to use that as a secondary home?
And if it's not legal, you're not going to be able to utilize
Gotcha.
that contract. So the legal barrier for qualifying for a mortgage, you can't use it. Now, how they utilize it after you own, that's on them.
Right.
But for qualification purposes, you cannot.
So they would have to buy that as an investment property, and if they're going to use that to get the.
Correct.
Gotcha.
Correct.
All right, great.
Correct.
That's good
yeah.
stuff.
Yeah. I don't know. What else can we talk about? I feel like
I think we pretty much covered the.
I think we covered it good. Yeah. I think we did good. Good. Awesome. Let's wrap it up. So once again, my name is Amrish Diaz. I'm with Cardinal Financial. I'm an experienced mortgage banker. And then
I'm Robert Zabbia, the Zabbia Insurance Agency. experienced insurance agent for over 25 years now, which is crazy. And I run a really good team that is really cares about our customers. That's like the biggest thing. I hire people. I don't hire insurance agents, and I train them to do the insurance.
Yeah.
And and we're just here to help. Whether you're a realtor, you're a mortgage person, you're a home buyer, you're thinking about buying a home, throw the what ifs at us. That's what we're here for. We're not the type that say, oh, if you're not buying the house, don't. If you want to quote for the insurance because you're curious, we'll do that for you. I mean, that's what we do.
Yep. And Rob, how do people find you?
So you can go to zabbiaagency.com, call us at 516-799-3800.
Okay, perfect. And if you're looking for me, I'm Amrish Diaz. My cell phone's 516-860-6238. You can text me. You can email me. My email is amrish.diaz, D-I-A-S, at cardinalfinancial.com. So I think we're doing good. We're doing great. Awesome, man. Thanks, brother. This is great.
We'll be able to do that.
Thank you.